Hi, good afternoon, everyone. This is Maria Rodriguez from the Perryman and Associates team. I wanted to take a second to thank you all for joining us. Today, we have George Padilla from Avalara sharing with us how the new year heralds in new tax law obligations and what that means for all of us. As always, if you have any questions during the presentation, feel free to utilize that chat box down on the right-hand corner. And of course, client care is always available to answer your questions after the webinar as well. Without any further ado, I'll turn this over to George.
Thank you, Maria. I appreciate it. As Maria mentioned, my name is George Padilla. I'm with Avalara. I'm very excited to be here, and thank you for having me, Perryman and Associates. Today, what I'll be talking about is economic nexus in the future of sales tax. There's been a pretty important Supreme Court ruling case that just happened last year, and I'll be talking about that and what that does to your business. So I'll do a quick intro about myself. I'll talk about the South Dakota versus Wayfair ruling, economic nexus and what has happened because of the ruling, what should you do, a potential solution with automating sales tax compliance, and if you have any questions or answers, I'd be more than happy to help you at the end. So just jumping right in, I'll tell you a little about myself. My name is George Padilla. I've been with Avalara for just under 2 years. Fortunately, I love what I do. I manage the relationship between Avalara and Perryman and Associates. So I'm not a salesperson. So I hope you don't feel threatened by anything that I say. This is just purely informational and some possible solutions that we have. If you are interested at the very end, I can pass you through to one of our salespeople and they can help you with that as well. And Perryman would be the people that coordinate that for us. So just talk about exactly what South Dakota versus Wayfair was. To talk about that, first you have to talk about the Quill Corp versus North Dakota. Now the Quill Corp versus North Dakota was a 1992 ruling that was a Supreme Court case where North Dakota wanted the Quill Corp to charge sales tax to their customers. Well, Quill Corp argued since they don't have a physical presence in North Dakota, that they didn't have to charge sales tax. Well, the ruling came down and the US Supreme Court sided with the Quill Corp and said because they don't have physical presence, they are not required to charge sales tax to their customers. However, the Supreme Court did rule that they were going to leave each state to interpret exactly what a physical presence was. So now fast forward to June of 2018, the Supreme Court had another ruling. This time, instead of North Dakota, it was South Dakota. And it was the South Dakota versus Wayfair. And if you're wondering why it's the Dakotas, it's because they have a sparse population and they're desperate for funds. And they're trying to figure out how to collect all of this revenue because obviously they don't want to be running at a deficit. So with South Dakota, they brought it to the Supreme Court and they said, hey, we want Wayfair to charge sales tax. But Wayfair made the same argument with what Quill Corp said in the 1992 ruling. But this time, the Supreme Court sided with the state of South Dakota. And the reason why is one simple fact, is that the advent of the internet has brought along online retailers that are having unfair advantages to people within the states. So you'd have companies like Amazon and companies like Wayfair charging no sales tax to the residents of South Dakota. Meanwhile, these brick and mortar stores that were running and are actually voters within that area were unfairly disadvantaged as much as 10, 15, 20%. And when times are tough, people do go for the cheapest thing, not necessarily what is the right thing to do. And the Supreme Court saw that, fortunately. And what's interestingly enough is that it wasn't even a partisan vote to where you have the conservatives with the liberals. It was a very bipartisan decision that was made. But what that does is that it just says that remote sellers not currently registered with the state now have to have threshold requirements to where instead of having a physical presence, it's based on their economic levels. So annual sales in excess of $100,000 or 200 transactions into the state of South Dakota now triggers nexus. And the most important thing about this ruling is that the physical presence rule has been overturned. So if you're currently registered in the state, you don't have to re-register. It doesn't change what is tax exempt or taxable. So for example, food, it's not taxed, so it won't be taxable in the future. But it will now apply to service providers and not just tangible personal property, as South Dakota does tax many services. And then it also apply to manufacturers and wholesalers who sell directly to consumers. So economic nexus, and what is that? And why is that important? The reason why it's important is because 47% of total state revenue is made up of sales tax. And the reason is because no one has ever gotten elected by saying, we're going to increase your property taxes, or we're going to raise your income taxes, or we're going to raise your corporate taxes. The best way of a state to collect revenue without too much liability is through sales tax. So economic nexus is a tax collecting obligation imposed on the sellers based on their level of economic activity within a state. So unlike physical presence, it's based entirely on revenue, transactions, or both. And I'll get into that in a little bit of what those differences are. But like most sales tax laws, economic nexus vary by state, all aim to level the playing field between non-collecting out-of-state sellers and brick and mortar businesses. So one thing that I want to show you is in June, when the Supreme Court case happened, you'll see this is as of July 2018. You'll notice all of these states that adopted the economic nexus laws, and those were 19 states. And also, one thing that I should make clear is that this isn't going to replace nexus laws at all. This is going to add to existing nexus laws. So for example, let's take click-through nexus. So if you're in the state of Florida, you know that you don't have any nexus laws as of now. But let's say you decide to post a banner ad and you target some people in Louisiana. Well, if you're posting a banner ad on a particular website, trying to get that audience that visits that website to go to your website, all of a sudden that triggers a click-through nexus if they click on that link and go to your site. And also other types of nexus laws to where, let's say, you have a remote employee in a different state. Just by having that remote employee, that will also trigger nexus. Or if you're going to a trade show, if you're going to Vegas for 3 or 4 days, if you're there a certain amount of time during a trade show, that can also trigger nexus. Now, keep in mind, I'm not a CPA or an accountant, so verify all of this with your SALT CPA, but in general, that is the case. But one thing that I wanted to highlight for you, if you look at the 19 states, is that as of October 4th, 2018, less than 3 months later, you now have 29 states that have adopted this economic nexus mode. Now you think 29 states, that's impressive, but you know what's even more impressive or disheartening, whichever way you want to look at it, is as of January 17th, 2019, you now have 39 states that are adopting economic nexus laws. It's not a question of if they're going to switch over, it's when they're going to switch over and add economic nexus to nexus laws within a certain state. Now, at this point, I'm going to back away from my PowerPoint presentation and show you something that can really help you. So one thing that you can do is we have a resource, and I've had the link included in my site to where I will talk to you about these Avalara Wayfair laws. So if you type in, if you go to avalara.com and type in Wayfair, or if you just Google Avalara Wayfair, you'll come up to this page. And what this page will give you the most up-to-date chart of exactly what economic nexus laws are changing. Now, as I mentioned, laws vary from state to state. So let me show you. Let's say you're looking at Alabama. Well, economic nexus effective date started October 1st, 2018. And the thresholds are more than $250,000 and additional activities. Now we have this link that you can just click, and it will go into the Alabama legislature, the federal law, that'll give you exactly what those specifics are from every state. Now, again, every state is different, whether it's California. This one starts April 1st, 2019, whereas Colorado started in December. So there's a lot of good information, and it's free for anyone to look at. There are certain laws that we've heard about that could be coming through the pipe, but we think that those might be disputed. So we're only including the laws that are definitive and are completely set. But again, I would contact your SALT CPA to confirm all of this information. So going back to the PowerPoint presentation, these are a few examples of those rules that I just showed you. So example for Vermont, they started in July 1st of 2018. So remote sellers who do a certain amount of business in Vermont must register within a state and collect and remit sales tax and use tax starting July 1st, 2018. However, look at Hawaii. Hawaii started as of July 1st, 2018. But what they did is that they only took effect July 1st, 2018, similar to Vermont. But what they also did is they applied it to taxable years beginning after December 31st, 2017. Basically saying that they're backdating everything 6 months. I guess they're having a big deficit problem. But the whole point of this is that every state is different and there's no uniformity. So here's a few other states that do have those changes. So what can you do? So first thing you want to do is call your SALT CPA. SALT just means a state and local tax CPA. And you might have a local CPA in Florida that handles, taxes, but what a SALT CPA does is it'll actually look at municipalities on a nationwide level and be like, hey, what are my liabilities within California? What are my liabilities within Texas? And so on and so forth. If you don't have a SALT CPA, we also have a service that'll actually can handle that as well. So we have a Avalera Tax Advisor Services, and we can work directly with them to talk about Nexus study and what exactly your sales tax liabilities may be. And here's the link, as I mentioned, where I showed you that page that talks about all of this changes that are happening. It also includes some videos and blogs and also a frequently asked question guide. This is updated daily, by the way, so it never has any stagnant information, especially our blogs. But again, if you don't want to write this down, you can email Perryman and Associates and I can forward it to you. Or you could also type in Google Avalera and Wayfair, and it'll take you directly to that site. So automating sales tax compliance and what can do. Well, top performing organizations are 72% more likely to leverage real-time updates to tax regulatory changes. The reason why is because there was 40,000 changes last year alone in sales tax law. And they're also 3.3 times likely to have automated workflows for tax preparation, filing, remittance, and recovery. And I'm going to show why it's so time consuming and why large corporations and companies are moving to this automated system. Because tax calculations are just the tip of the iceberg. You also have nexus. As I spoke about before, where do you have sales tax liability? Product taxability. Is a product taxable or not? And I'll get into that in a little bit. You'd be surprised at the crazy laws that the United States has as to what is taxable and what isn't. Jurisdiction assignments. And I'll get into this as well. And basically, just because you're in a zip code doesn't mean that you know what that sales tax rate is, and I'll show you why. Exemption certificates. Let's say you're not collecting sales tax. You still need an exemption certificate to manage with your customers. And for example, in the state of Florida, every exemption certificate expires December 31st, and you have to renew it. So even if you applied for an exemption certificate in November, you would have to renew it January 1st. Whereas in the state of New Jersey, it's on the calendar year. So if you applied for it in July, you have to renew it in July. And again, every state's different. Audit readiness. Let's say you're going to be audited. Are you ready? Do you have that paperwork at hand to be able to show that auditor? And then also state and local tax prep and filing. And I'll show you an example of how insanely time consuming that can be. So any efforts spent on sales and use tax compliance and related activities are just non-revenue generating activities. And your VP of finance or your controller or someone that's handling this type of function within your organization can be doing something a little more effective with their time, like streamlining the accounts receivable or streamlining the accounts payable department, or looking at a product and bringing a product to market within a certain demographic. That's a better use of their time. That's a little more revenue generating. So I was going to show you an example of exactly why these sales tax laws are just insane in the United States. So let's take, for example, bagels in New York. Well, a bagel is considered a food, so a food is considered tax-free. However, if you slice that bagel in half, all of a sudden, there's a tax associated to it. Reason why is because it's prepared food. So adding a slice adds taxes. Candy bars in Indiana. If you buy a Hershey bar, which is just it's candy, right? So of course it would be taxable. However, if you buy a cookies and cream Hershey bar or a Kit Kat or a Twix, all of a sudden it's tax-free. Why is that, you ask? Because wheat is a subsidized item in the state of Indiana. And since it's subsidized, it's considered a food, which is now tax-free. Donuts in Texas. If you buy 5 donuts or less in the state of Texas, it's taxable. But if you buy 6 donuts or more in the state of Texas, it is now tax-free. It's not just limited to products either. So snow removal, for example, it's taxable in Ohio, but it's exempt in Illinois. And tree trimming in California, it's taxable if you use lights, but the labor alone is tax-free. Now imagine being someone who decides what the tax rates are for your company, for your products or services in Florida. Imagine trying to figure out what all these laws are for every state. It's tough enough just for one. Is that necessarily the best use of their time? So it's not just products as well, or services. Look at software. Software is taxed 450 different ways around 45 categories, whether it's canned software, on tangible personal property, canned software and downloaded, custom software which is delivered, custom software that's downloaded, or customization of canned software. The point is that this is such a huge issue to where you don't know if necessarily if you have the correct tax rates. And no auditors ever said, you know what, we're going to let you go off with a warning. They get paid by doing this. And this is by no means a scare tactic. This is just the matter of the fact is that 32 states right now are operating at a deficit. And you keep on hearing about cutting taxes. You don't hear about raising taxes. And this is how they're making up for that gap. So let's say you decide that you do want to calculate your own tax rates. Well, I'm going to show you why just using zip codes alone isn't the most effective use of your time, or why that's inaccurate. So take Denver, for example. Now within Denver, let's go into Greenwood Village. Now, if you just look here from Greenwood Village, you would say, hey, there's the zip code. I'm going to look up the sales tax rates within that zip code, and that would be correct, right? No. So the reason why is because of redistricting or gerrymandering, depending on which side of the political fence you fall on. But if you had just been on that, you would have seen that there's some districts within the 8011. So you would have missed out on 1, 2, 3, 4, 5, 6 different sales tax districts that you would have missed out. So because of using the redistricting model that has happened over the last 40, 50 years, you can't just rely on zip codes alone. And I'm going to show you why Avalara is different in a little bit. So then you say, okay, I've figured out the sales tax rates. Let me go into the returns, and I think I can calculate sales tax returns on my own. Well, someone that has worked with us for 30 years, she was a former state auditor, but what she did is she took the California state tax return and she tried to figure out how long it would take to do it. And I have an illustration of it for you. So this is the first page of the state tax return. Looks normal, still looks normal. Here's where the fun part starts. If you look right here, you have to break down the sales tax return down to city level. In every city, what you sold, and every city has different rates. How much time would it take for you to calculate these rates for every city? I just showed you one city in Colorado. Imagine trying to calculate cities for everyone. And the thing is, you can guesstimate, but again, an auditor is not going to let you off just by doing your best efforts. And the worst thing you can do is taking no action. Is this the best use of your time? This is a non-revenue generating activity. So with Avalara, what we do is we have three separate components. We have the AvaTax, which is what we're known for, to where we'll automate your sales tax calculations automatically, updated every day in real time, and it's distributed via the cloud. There's no updates that you'd have to do. And we also do in a year 6.7 billion transactions, and I dare to say that number is a lot higher as of now. We also manage your exemption certificates, to where currently we manage 18 million exemption certificates for our customers in an automated email management solution. So let's say you have one of your vendors that says that they have an exemption certificate that they need. We will store it for you, and when it expires, we will send them to you, send an email to them saying, hey, we need your updated one, and we do that automatically for you. And then returns, we also automatically calculate and remit your returns for you. So we're the only end-to-end solution for this type of product. So we're accurate. We are an end-to-end solution, compliance solution, whether it's calculations, tax document management, and returns. We're born and managed in the cloud, and we're also integrated, where we have over 600 integrations, whether it's into ERP, POS systems, e-commerce billing, and CRM systems. And one thing I will say is that we're a software company that does taxes and not a tax company that does software. And the reason why that's important is because we've prided ourselves on making us have the best possible solution for your systems, to where it is a seamless transition, to where you won't have any issues, because a lot of times they won't have necessarily the best connectors. Sage and Acumatica and NetSuite are some of our biggest connectors that we have, and we have hundreds of clients that currently work with both of them, if not thousands actually. But here are also some of our logos that we have, whether it's Dick's Sporting Goods, 3M, Adidas, and I dare to say that you've run across at least one of these companies in the last month or so, if not less, that you deal with. And if not, we also run the VAT taxes for Amazon Europe. So I would dare to wager after Christmas or the holiday season that most of you have gone on Amazon as well. So that's all I have right now. Thank you very much for your time. I'd love to answer any questions that I have. Again, I'm not a salesperson, so feel free to not be threatened by my questions, but if I don't know the answer, I'd be more than happy to put you through to someone that does. Thank you for your time.
Thank you so much, George, and thank you everybody for joining us. If anybody has any questions, please do contact us at the email address you see on your screen, and we will be happy to get back with you. And also we'll be following up with you after the presentation to see if you have any questions as well. So thanks again, George.
Thank you. Hope everyone has a great day.